Good morning, everyone, and welcome to the first episode of Early Birds, where we look at the financial market before it opens. So today is the first episode. It's a little bit late. I was trying to get it out before 9 o'clock. So I kind of just thought of an idea of doing this today. Anyway, so let's get into it. So first on the agenda, Australian government is going to fund a tungsten mine to break the reliance on the current tungsten supply, which is from China. US is kind of doing the same thing because 80% of the tungsten that being used in the US is actually from China, and tungsten is considered a strategic mineral because it's the second hardest mineral known to man, right after diamond. And it has military application. It's used to help with drilling and cutting metals that are used to build aircrafts and ships and all of that good stuff. Well, not good stuff, depending on which side of the airplane you're sitting in, the aircraft you're sitting in, right? Which side of the army you're on. Now, so tungsten. So in Australia, there we have a very small deposit of tungsten, and that is in Tasmania. And the company that kind of look after the mine is King Island Scheelites Limited, and it is seeking for further funding from the government, $150 million from the Australian government for its operation, and the US is doing something similar where it's getting its companies or even kind of contracting Australians mining companies to set up mines in the US, because the tungsten mines around where the North America, so Canada and America and China and in Russia. So there's just too much from the government's point of view. There's just too much reliance on external import of tungsten from China, and they want to break that reliance. And so looking at the chart for King Island Scheelite, and Scheelite is an ore, a type of a tungsten ore, as you can see it there. Now, looking at the chart, it's kind of been rising, and with this kind of news, it's actually what I'm expecting is for it to continue rising. Looking at another brokerage firm, the indicative price on open is 2 cents higher, up to 14 cents, considering it's only trading at 12 cents at the moment. 2 cents up is around 16% up. So and with this kind of news and this kind of strategic goal and strategic pathway, I expect that tungsten price is going to go up, and it's going to be an asset play for these kind of companies. So these kind of company will appreciate in value. Okay, moving on to the next one. So GameStop been on the news for the past week, since it rose to its meteoric heights, but over the past 2 days it dropped from its 52 weeks high, or the highest, it's around $500 and so dollars. So it dropped down now to $135 to $90, it seems, right here. So it dropped by $135. And it kind of takes silver with it, and silver, there was a spike in silver yesterday because it's there's a lot of hype going on, and the Reddit army is kind of pushing up the silver prices. Now the other few other company that was being shorted, like AMC, Koss, and Express, following kind of the same trend, GME. Jordan Belfort, the real wolf of Wall Street, also kind of warned that this would happen in some way, where like all these companies will eventually follow the same trend downwards. And so he does raise his concern for those who are entering in the game a little late, and you got to be careful not to gamble with money you cannot lose. And I guess that goes back to the principle of investing and trading, is that only invest or trade what you can afford to lose. You don't want to use your life savings, because that would be a quite dramatic loss. so it is important to consider that, and there's a lot of factors to the recent drop in prices, and Elon Musk been grilling Robinhood chief executive on GameStop, so they kind of like limit the trading on GameStop, and I think CME actually raises the margin, which is like almost you can see it as a fee to actually per trade, and it's kind of like affecting the way that people buy GameStop, and people are trading it, so it affects the price and make it go down. Mark Cuban takes an opposite stand in the term of like he actually rejoices in what's happening to the financial institution, and really rooting for the little guys here. As the smaller retail investors are having the financial institution run for their money, and no pun intended there. And he kind of likened the situation now to what's happened with Bitcoin, where it dropped dramatically, but there was a second wind, and now it's up to it's higher than before. I think it's at 32,000, could be a little bit higher. But he say to kind of hold fast, because there's gonna be a second round. As the way he sees it, there's going to be a second round of shorting by the institutional investors, and there's going to be more push to get the price back up. All right, Jeff Bezos, the second richest man in the world, he's stepping down as CEO from Amazon. He's stepping down in fall. I think that's American fall this year. And Andy Jassy, who is like the CEO of AWS, which is a branch of Amazon, and he's gonna step up to be CEO. So Jeff Bezos just stepping back as executive chairman. Looking at his share price, it's not doing too bad for itself. I did try look into buying it probably a year or so back at $2,000 something per share. I thought it was expensive, but it rose to 3,380. So that's a tremendous rise. And Jeff Bezos, kind of like look back on his effort and his journey to make Amazon the behemoth that it is today. So now AWS as a IT web developer, I used AWS, and compared to like other cloud provider service, AWS definitely is very powerful compared to the other services. It is very hard to kind of learn. It has a steep learning curve, steeper than the other services, but the granularity and the functionality it provides, and the interoperability between its individual services far outperform all the other competitors. So I think Amazon has a really good has very good services in the AWS. So looking to see that it's expand and doing more. AWS recently got into a controversy where it kind of shut down one right-wing media. I can't remember what it's called. It's Parler. Yeah, that's right. It shut down that platform because of the Trump supporters. Double check me on that one though. I'm not too familiar with that story. All right, now back to the current health situation that we're in. The UK strain is apparently has mutated to be much more powerful, in the the current vaccine by Pfizer, Novavax, and Johnson & Johnson is suffering because of it. It's the efficacy of those vaccines actually dropped by 90%. What the implication that has is that reopening of economy is going to be slower. Reopening of international travel is going to be delayed, and the share prices of those companies going to suffer. So from the look of the close on the New York Stock Exchange overnight, we can see that Pfizer, Novavax, and Johnson & Johnson has dropped in prices. So AstraZeneca is another company that has produce a vaccine, and I believe that's the one we're using in Australia. Now, they haven't stated if this new variant going to affect their vaccine, but if it does, I expect their price is gonna suffer also. Okay, so going now with Tesla. Tesla is recalling 135,000 of its vehicles for touchscreen failure. So Tesla, so that's going to be news that's going to, it seems like it hasn't affected the share price. And as you can see from the graph, it's just a tremendous rise in share price, where it's probably below $100 just 12 months ago, now up to almost $900. So if any of you bought Tesla in 2020, you'd be laughing to the bank right now. So good on you. I did go in around the 400 mark, and I am sitting pretty, even though I could be sitting prettier. Doesn't really matter. A win is a win. Don't be too greedy. And yeah, so the significance of this is Tesla. So it seems like a hardware issue, because Tesla has tried to make it that when there is a problem, you don't actually have to bring your vehicle in, and so they can do, like, let's say if there's a software failure, they can just update it over the internet kind of thing. So online update and stuff, almost like you're updating a phone. But it seems like a hardware issue that the these vehicles are facing. At the same time, Elon Musk decided to take a break from Twitter. I mean, because I guess every time he says something, it's going to be a big reaction somewhere, especially what happened over at GameStop, where all he tweeted was one word, GameStonks, and crazy things happen, as we can see. So I guess his followers going to be anticipating for his return to Twitter. All right, and going back to Australia now, RBA had a meeting yesterday. It's first Tuesday of every month, and they decided that they're going to keep the official cash rate at 0.1%. So it's the lowest it's ever been. I hope it doesn't go any lower than that, because right now what that means is going to be a lot of cheap money floating around, and this has repercussion around especially in the Australian stock exchange or in the share market, because ASX is expected to rise today, again because with cheaper money, companies can afford to borrow more, and that's what you kind of want. You want to especially in this kind of situation, you want people to continue to do business, and you want to make it easier for them, and there's a few ways to do that. One is reduce the interest rate, the other one is to print more money, but then you got problems with inflation if you print too much money. So with the reduction in rates, what we will see is a rise in borrowing, like commercial or even personal, and then so that's why the ASX is expected to jump today, and hopefully share prices of the stock that people are holding will follow suit. Obviously, not every single company will go up, depending on their exposure to their own factors and risks. But on the personal lending side, so it makes so with the cash rate being low, those commercial banks like CBA and Westpac can afford to kind of lend money to people for a lower interest rate. So then it makes it easier for them to kind of buy houses, and we see that reflected in the housing change. You can see here change on month is all green, so it's been going up, and in Darwin gone up 15% year on year. That's a crazy amount. So people, young Australians, they kind of hoping that with the crash, with the pandemic, maybe there will be a correction in price, so then they can jump in. But with the cheaper money and people actually start jumping in, it's making the house prices even higher than pre-pandemic level, and that's very worrying for those who can't afford houses before. Now it's even less likely, because jobs even more business opportunities a little bit scarcer because of lower international travel, because of some Australia, one of the biggest export of Victoria anyways is education and tourism. I believe is pretty much the same for New South Wales and Queensland too. So those are interesting factors. But at the same time, because of the ability to work from home, regional suburbs and areas are seeing a rise in house prices, because now people don't have to go to work and company go into city to go to work, and company can see that they're actually more productive working at home or as equally productive. So they're giving that allowance to work from home, and this give the people ability to kind of buy out further. And it's something I find is a very positive move for the economy and the whole housing market situation, because Australia is a big island in the middle. It's just a lot of desert, and people like to live in the city with a lot of essential services and all of that, and amenities. But the problem with that is if you drive everyone to like a small densely populated area, you're going to bring up the housing prices. But with this ability to work from home, people are more likely to go out further, buy cheaper houses but bigger land, and build communities there, build opportunities, build business there. So I think it's a positive thing for Australian economy to allow for Australian businesses to allow its employees to work from home. Obviously, not every job can be done from home. Like hospitality, you have to be on site. You can't have actually, if you have a robotics waiter, then it's kind of like make your own job redundant. So there's certain jobs and people have to kind of be in person for. But what does also means is that people can like this will affect the way that education is targeted. So looking forward into the future, depending on how you want to organize your life, you might pick a course, a university course, or a skill that will allow you to cater for your lifestyle. So yeah, that's anyways, that's pretty much for today's early birds. I hope you find that useful. If there's any other thing you want to comment, put that down below. If you like what you see here, please share and subscribe. Thank you so much. Take care.